What is going on, investors? Hopefully, you guys are having a great day out there. It is a Monday. It is the start of a new week, and it is the start of a big week in terms of earnings. We're going to kick things off today with the Coca-Cola Company, ticker symbol KO, obviously the iconic beverage maker and manufacturer that is known worldwide. We'll talk about some broad things here on this one. Okay, first of all, obviously, we're going to go into the numbers in the most recent quarter. We'll take a look at the revenue, the profit, those types of things. We'll jump over to the stock chart as well. This one's actually been on a pretty monster rally here. Nice upward move here over the last few months, and it is up in the what I would call kind of an upper channel, upper part of a range. Will it break through? Will it break down from that? Those are the type of things we'll talk about. Talk about valuation a little bit with this one too. With that type of price run, typically you have a stretch of the valuation unless you have a lot of sales growth and things like that. We'll compare it to Pepsi as well. Run down a little bit of news as well. And buckle up. Here we go with Coca-Cola Company. Over the last year, this one's up about 14%. Year to date, it's down. We'll call it about 2%. It's been down a little bit more. We'll talk broadly about, is Coca-Cola something that you can add to your portfolio? Okay. Obviously, over the last year, 14% growth, not necessarily anything that I would personally sneeze at, but when you have epic growth in Bitcoin and certainly other stocks that we've seen, maybe with like an Amazon or a Facebook or something like that, or Google or Microsoft that has just really rallied hard over the last year, 2 years, is there room in your portfolio for kind of steady companies like Coca-Cola? We'll talk about that towards the end of the video as well. Now, just some investor channel history. One of the first videos I ever posted on this channel was back in 2016. How to read 10K annual reports was actually based entirely on the Coca-Cola Company. So I want to appreciate everybody that viewed that video and encouraged me to do more. Wouldn't be here actually if it wasn't for this video. A lot of positive comments on that one. Coca-Cola preps for a Coca-Cola Beverage Africa IPO. So it looks like they're going to spin out their African business unit to allow it to kind of grow on its own. Okay, it looks like they might need access to capital, might have different needs than other markets that Coca-Cola operates in. So they're actually going to spin this out. It'll be interesting to see, what kind of benefit. I doubt it's going to be a huge benefit when we get over to the revenue and things like that. They do break out. I think it's Middle East, Africa, and another region. So it's not going to be this big, gigantic windfall for shareholders, but interesting that Coca-Cola is willing to do this, and it could create some synergies inside their own business and allow the African unit to kind of stand on its own, and could attract more investment in this type of business. So that's actually pretty cool. Coca-Cola edges higher after organic sales beat. What people typically look for with Coca-Cola is they grow, and along with Pepsi and other beverage, well, really those two beverage makers, they often grow by just acquiring other beverages. Okay, they basically let other beverage makers kind of go out there, do all the hard work, get distribution. Once they get a little bit of distribution and they start cutting into Coca-Cola or Pepsi's business, well, guess what? They make an offer and they end up buying it. But you have organic sales. Obviously, a lot of those beverages are kind of tied up in the company now, but you also got things like Diet Coke and Coca-Cola and things like that. The organic sales were up 18%. And this is kind of a sneaky comeback play, okay? Coca-Cola talked a lot about in their press release how things are still locked down in some places. People aren't going out to eat as much. Obviously, you don't have stadiums and things like that are being filled and those types of things. As those things come back, it should benefit Coca-Cola to a certain degree. So the more you see that, it could be also another reason why this stock has just been on a monster run. People are seeing it kind of as a comeback play. Now, when you have a monster run in share price and you have a relatively steady business like Coca-Cola has, well, what happens is you kind of get, multiple, not necessarily multiple expansion, but this multiple does get expanded out to where it was maybe a year or so ago. Now, this chart, for some reason, it doesn't go back much farther than sometime in the mid to spring of last year. But we're seeing here Coca-Cola, this is a price to earnings, and I've got Pepsi in here on the blue line and Coca-Cola in the orange line. We actually seen they diverged a little bit. Pepsi's actually trading at a lower price to earnings than Coca-Cola. Coca-Cola's just been on a monster run here, at least from a price to earnings basis. We're seeing the same thing on a price to sales basis, okay? okay? They're trading at 7 times sales, which is really darn near close to the highest it's been since December. And they, sold off then. So we'll see what happens here. What this is showing me is that we could be getting a little bit stretched from a valuation perspective on Coca-Cola. And so what I like to do is when I see something like this, I then like to pair it to the chart as well, see what we're seeing here. Maybe the odds of a pullback are high, or maybe the probability of something like that is a little bit higher than normal. Before we get into that, let's take a look at the revenues, because you like to always balance all these things with the revenues. Maybe these financials are just rock solid gold, and it really doesn't matter about some of that other stuff. So it all ties together. All these things are little pieces to the puzzle, and we're kind of piecing them all together here on this video. So we've got our net operating revenues here. Those actually were up 5%. So we've got our 3 months ended here, March over April here, and we had $8.6 billion up to about $9 billion. Our cost of goods sold are here. This is what it costs to actually sell to get these revenues. Came in at $3.5 billion. It's actually pretty solid gross profit, okay, for a beverage. These are really, really nice margins. And so this is why you have new entrants into the space all the time, because this is actually pretty solid margin. And if you can get some sales, well, chances are you're probably going to make some money in this business if you can topple the competition out there like Pepsi and Coke. We see here from a gross profit perspective up 5% also. This is what I also like to see in a business, okay? You had your revenues grow 5%, you had your gross profit 5%. I think that's almost something that we'd expect with a business this old, this mature, this well run. This is exactly what you want to see. So you see gross profit tick up 5%. Now we have our selling general administrative expenses. You'd like to see these stay flat. And that's exactly what happened here. We actually see those stay flat. We've got some other little minor charges here that gives us operating income increasing, 14%, up from 2.3 to $2.7 billion. This is really, really nice. And I can kind of see why maybe the stock is continuing to edge higher. These are the type of results that if you're in the market for a steadily run business, you're not necessarily, you've got enough Dogecoin in your portfolio. You got enough Apple and Microsoft stock where you're kind of high flying with those. Well, you want some steady performers. This is exactly what you like to see. 5% growth on the top line, 5% growth on the gross profit side, and 14% growth on the operating income side. Those are all very, very strong things. Now, they've got some interest expense and income and things like that. That gets us down to this income before income. Well, let's just come all the way down to consolidated net income. I'm not going to give them a pass on income tax, especially if they raise those here in the United States. You went from 2.7 down to 2.2 billion. So that's a 19% decline. Obviously, we're factoring in, look, their income taxes looks like those went up 135%. You also had this interest expense tick up quite as a lot as well. I don't know if that's tied to rising rates over the last 4 or 5 months. Could be that they just they didn't refinance, or some maturities kind of came forward. We'll see what happens when we move through these. But overall, this is pretty nice, okay? I'll tell you what, as an investor, what I tend to focus on, okay, with all companies, including here with Coca-Cola, is I focus on revenue growth. I focus on high gross profit. I like to see these match up as well. If you have growth up here, I certainly want to see growth here. And I focus on operating income, because these are things that the company can control. They can't necessarily control interest rates. They certainly can't control taxes to a certain degree. And so as we move through the income statement, I tend to put a little less weight on this net income side. All things being considered, really nice. You got diluted income or earnings per share, and we'll call that 52 cents. In fact, that's exactly what it is. And you've got this dividend rate sitting at $1.68. So all things being equal, they're earning well over $2, because this is for just a quarter. So you can times this number by 4. You get to about $2 in earnings for the entire year. They paid $1.68 in dividends. Everything looking very clean in that sense. So moving on to the balance sheet here. So what do I look for when I'm looking at a balance sheet? Okay, what I'm looking for is big differences, okay? So what I first like to do is look at our time frame. So we're looking from end of December, or really the beginning of January, to the current time right here, April 2nd. So just a couple of months. What I look for is big changes here, okay? So we got total cash right here. That ticked up by about $1.8 billion, most of that flowing into the cash side. So we'll talk about that here in a second, especially when we get to cash flows. Total assets ticked up just marginally, about $2.7 billion. If this was to swing by 10 billion, one way or another, I would come in here and look and see, hey, well, what happened? Was it inventory? Was it something else? Okay, we see inventory basically flat. All things being equal, very steady quarter. We do see a small addition up here to the cash and kind of short-term investments. Now, same thing when you come down here to the liability side. I look for big changes. Okay, I look for, big swings in these numbers. We went from 14 on the current liability side up to 16. It looks like to me where most of that is this current maturity of long-term debt. So we went from 485. Now we owe very soon $2.8 billion. We've got our long-term debt. This is the other thing I tend to look for with companies with debt, and that's basically flat over the past year or so. Everything looks pretty clean, in my opinion. You got total liabilities and net equity basically the same. That's what you like to see actually with these very steady businesses like Coca-Cola. Finally, moving over to cash flows here, 3 months ended here back in March, and in this year, we're seeing just strong, just mega strong cash flows in this one. Okay, $1.6 billion worth of cash. This is super, super strong. The other thing I like to look for is in these investing activities, are they investing more money? Are they investing less money? It looks over the last year, pretty much about the same. Okay, a little bit less, but all things being equal on some of these lines, they're basically equal. Okay, we've had a little bit less investment in the quarter. Some of that could be, related to things that are going on in the world. It could be something that's just management is aware of, or that they are wanting to do differently this time around compared to last year. Now we've got financing activities. This is what I really like to look at too. We've got issuance of debt. You see they issued a ton of debt, like a lot of companies last year as we were sinking into the pandemic. Most companies, or a lot of companies that had access to credit, just drew down on it. Okay, and that's exactly what they did. This year, a little bit less. We've got these payments of debt here, a little bit of payments of debt, and then we've got our dividends here as well. They've got plenty of cash. They almost had as much cash flow in the quarter to kind of pay for these dividends. You'd like to see that probably increase a little bit as we move forward, but all things being considered, this is a company with high cash flows, pay a high amount of that out to the shareholder as well. That's why these stocks like Coca-Cola and other stocks that are similar to this tend to be very steady. Now, finally, we'll take a look at just really quickly at operating segments. This is what we see here is net operating revenues, and then we've got operating income here, and then you've got income before income and taxes over here. I'll focus on these first two columns. You see here, we've got the Europe, Middle East, and Africa. We talked about how they might be spinning off this Africa business. You see that Europe, Middle East, and Africa is still, I don't want to say a small part of their business, but it's not as big as North America. It's not a single one of these is bigger than Asia Pacific or their bottling investments. So while Africa is a gigantic market and a gigantic country, and I'm sure one that is emerging in terms of its ability to support a business like this, while the spin out will likely be tangible to shareholders of Coca-Cola, it's probably not going to be something like maybe spinning out the North America business or the Asia Pacific business. Those would be big IPOs or big spin-offs in terms of maybe dividends or things like that you might benefit as a shareholder of the common shares of Coca-Cola. What I just noticed here is that all the businesses obviously earn revenue, but they're all make operating income as well. It's just a very well-run business. Even though you have some declines based on currency and things like that, they're still churning in operating income. That just leads to a very steady company. Now, is there room for stocks like this in your portfolio? I think absolutely, but I think you need to buy them at the right time. Obviously, if you'd bought in Coca-Cola back here at $54, $55 per share, and it drew all the way down here to $47, $48 per share, sure, you're back here at even after a couple of months, but that's not necessarily what you want to do when you could have tied that money up into much better performing assets. So what I'm seeing here is Coca-Cola is kind of getting stretched, in my opinion, from a traditional valuation metric, price to sales, price to earnings. Appears like it's back in this December timeframe. Look, Back in December, we kind of peaked out here in price to sales. Back in December, we peaked out here in price to earnings. And what happened to the stock when we peaked out here in December? Well, the stock had a pretty gigantic drawdown from 54 down to 47. It's about $7 per share. While that's not a huge drawdown, we certainly see high-flying stocks like Plug Power or Fuel Cell have bigger swings than that. If you're buying Coca-Cola to be kind of a steady investment, it might not necessarily be might not necessarily be what you're looking for. So I would really price this one considerably. I would watch it carefully at this level. Okay, I marked out this 54.50 level. That's only about 50 cents from where the stock is now. I would look at closely from here. Now, can we break above this level like we did here and then come crashing down? I think that is possible with this one. Whether or not it comes all the way down to the bottom end of this channel, take a look. Coca-Cola channeled sideways from about, this is like October of 2020. Obviously, we had this big, gigantic peak up, but then we came back down into this channel earlier this year only to come back. We're basically have two separate channels with Coca-Cola stock. I would not necessarily want to buy this from 51 up to 54. Just doesn't necessarily seem like it's that. I don't know how much more upside the stock has if you buy it from 51 to 54. Now, I could be totally wrong. This thing could get to 60 to 70 to 80, and that certainly would be a fantastic investment, I think, compared to anything. But personally, I think of business like this that's more steady, I'd like to get it for a very good price from a traditional valuation metric, from a chart perspective as well. Also, as this price comes down, this dividend yield gets even more attractive. I know it's sitting at 3%. That is actually very attractive. But if this thing were to pull back 10, 15, 20%, you could get this maybe at 4, even closer to 5% yield. I'd like it more in here. This box, 48 up to about, we'll call it 50, somewhere down in this lower end of the channel is personally where I would target Coca-Cola, something that you might want on your watch list. So hopefully you guys enjoyed this one. Let me know down in the comments. If you already own this stock, I wouldn't be concerned. Now, if you want a profit take up in here, I think it probably makes a little sense. But if you already own this one, I think you're just sitting it in there, you're dividend reinvesting, and you're just watching the business kind of organically grow over a very long period of time. Let me know down in the comments what you think. Thanks for tuning in to this video. We'll be back with lots more videos all this week here on the channel. Good luck with your investments.